There really is no intelligent reason to increase your trading size if your positions are showing losses. It's better to lose correctly than to win incorrectly. When you sell half, if the stock goes higher, you say to yourself, "Thank goodness I kept half." If the stock goes lower, you'll say, "Thank goodness I sold half." Psychologically, it's a win/win either way. There have been too many times when I have been shaken out of a good position by looking at the short-term time frame. As a stock trader, when you strip off what feels natural and learn to do what feels unnatural, you become supernatural. Not losing big is the single most important factor for winning big. As a speculator, losing is not a choice, but how much you lose is. Before I enter a stock position, the first thing I do is decide where I'm going to cut my loss. As the stock moves up, my priority changes to protecting my break-even price. If I'm fortunate to have a decent gain, my priority shifts to protecting my profit. During a difficult trading environment, your gains will be smaller and less frequent than during a healthy market. When this occurs, remember 3 words: just do it. Always think of risk in relation to reward. You must adjust your risk as a function of potential reward. Four very dangerous words, just this one time. I want to be at a profit immediately. If I don't see a profit very soon after I buy the stock, I'm inclined to just get out. If you don't have a plan, you will surely experience paralyzing emotions and second-guess yourself at key decision-making moments. Long-term success in the stock market has nothing to do with hope or luck. Winning stock traders have rules and a well-thought-out plan. Conversely, losers lack rules, or if they have rules, they don't stick to them for very long, they deviate. The key is to see things as they are, operating in the now, without seeing things as worse than they are out of fear, or better than they are out of greed. If you want to mitigate risk effectively, you simply must acknowledge that stocks don't manage themselves. You're the manager, and it's up to you to protect your hard-earned capital. In the stock market, those who are not humble are destined to be humbled. Trading is serious business with real money on the line. Why would you go into it without a well-thought-out plan of action? Yet, most people do. It doesn't feel great breaking even on a trade that was once a profit, but it feels a lot better than when you let a good size gain turn into a losing trade. To compound your money, and not your mistakes, your goal is to buy on the way up, not on the way down. Luck is a short-term phenomenon. In the long run, luck is for losers. Never stray from the basics of rule number 1, of always going in with a plan. Once I make a profit, that money belongs to me. Yesterday's profit is part of today's principal. Potential and possibility reside in the fertile field of the unknown. Specialists get paid well, while those who know a little about many things make good conversation at parties. The CLUM principle: comfortable equals less and uncomfortable equals more. The reason most investors fail to sell and cut their loss short is because they fear that after they sell the stock might go back up, and they will be wrong twice. It's driven by the fear of regret, which stems from pure ego. Investing styles may differ among successful market players, but without exception, winning stock traders share certain key traits required for success. Fall short in those qualities and you will surely part ways with your money. If you want success in the stock market, before you do anything, you should develop a plan. There are many distractions that can cloud your judgment when trading. Your job is to keep your thinking pure and focused on what matters within your own circle of competence. The hallmark of a pro is to operate within this circle and ignore everything else. Long-term success in the stock market has nothing to do with hope or luck. Winning stock traders have rules and a well-thought-out plan. Conversely, losers lack rules, or if they have rules, they don't stick to them for very long, they deviate. Those who succeed big at anything all have the same attitude: you keep going until it happens or you die trying. Quitting is not an option. Not losing big is the single most important factor for winning big. As a speculator, losing is not a choice, but how much you lose is.